All right. So, we got to talk about the stock market in January 2025, right?
Yeah, in front of everyone's mind, I'm sure.
Seems like it. So, you sent us that article,
Oh, yeah.
and it was from mapsignals.com
Mm.
by Lucas Downey.
Okay.
And it's called Three Reasons to Buy Stocks in January 2025.
All right.
The craziest thing is the date on this thing, January 2nd, 2025.
Oh, wow.
Talk about cutting it close.
Really is timely.
But
Yeah.
one of the things that it kicks off by talking about is this thing called the Big Money Index.
Okay.
And it talks about a weak breadth signal at the end of 2024,
Mhm.
and the index dropped to 52%. Now, I'll admit, when I first read that, my gut reaction was like, oh, that doesn't sound good,
Right.
you know?
I understand that.
What's your take on that?
Well, I think, the big money index, the BMI, is a measure of the buying and selling pressure in the stock market.
Okay.
And it's looking at those big institutions, like the pension funds, the mutual funds,
Right.
hedge funds.
Yeah.
And so when you see this weak breadth, it actually means that fewer stocks are driving the market gains.
Okay, so it's not as broad of a...
Exactly.
Vehicle.
Fewer stocks carrying the weight.
Yeah, fewer stocks carrying the weight. So, okay, I'm starting to see where this is going.
Exactly.
So you're saying that maybe this is not a bad thing?
Well, historically, this type of market narrow leadership has actually been a bullish signal.
Oh, interesting.
And it might seem counterintuitive, but when you think about it, if only a few stocks are pushing the market higher, that could mean there's pent-up demand waiting to flow into other areas of the market.
So it's like a coiled spring. All that energy is ready to be unleashed.
That's a great analogy.
Yeah.
The article backs this up with some compelling data. Since 1928, following periods of low market breadth, just like this, the S&P 500 has seen an average 12-month gain of 15.4%.
Wow.
So, while weak breadth might sound a little alarming,
Right.
it could signal an opportunity.
Yeah, sometimes what looks shaky on the surface can actually be a sign of like this underlying strength.
Absolutely.
This is why I love these deep dives. We're always uncovering these like hidden patterns.
It is about looking, beyond the headlines and digging into the nuances of the market.
Totally.
Now, the article goes on to explore some historical trends that could influence the market in January 2025.
Right. And they point out that the S&P 500, has had gains of 24% in 2023
Yeah.
and then another 23% in 2024.
Right.
So that's 2 years of pretty stellar performance.
It is.
It is.
And this leads up to the article's first reason to consider buying stocks in January.
Okay.
That being the tendency for the market to continue to rise after periods of strong momentum.
So like a snowball effect.
In a sense, yes.
Yeah.
The market's got this upward momentum and it could just keep rolling.
Yeah. Yeah. So this article highlights that since 1925, following a year with gains of 20% or more in the S&P 500, the index has seen an average return of 8.4% the following year. So history suggests that riding this wave of momentum could be a viable strategy. What do you think about that? Is this momentum something that would sway your investment decisions?
It's definitely a factor I would weigh very carefully.
Okay.
But I think, you always have to remember that past performance isn't a foolproof predictor
Of course.
of future results. It's just one piece of the puzzle.
Yeah, we can learn from history, but we can't just assume that it's going to repeat itself.
Exactly.
Speaking of historical trends, the article points to another factor that could influence the market in January, and that is presidential election cycles.
Yes.
And this is interesting because 2025 marks the first year of a new presidential cycle.
Yes. And historically, this has been a positive period for the stock market.
Oh, so are we talking presidential rally kind of situation?
Not quite as dramatic as that.
Okay.
But since 1925, the average gain for the S&P 500 during the first year of a presidential election cycle has been 7.1%.
Okay.
Now, while that is a positive return, it is worth noting that it is actually lower than the average gain seen in pre-election and election years.
Really?
Yeah.
That's kind of surprising. I would have thought the excitement around an election year would, drive the market higher.
Yeah, but it seems that, election years can bring heightened market activity.
Right.
But the data suggests that the first year of a news cycle, while it's positive, it might offer a slightly more moderate pace of growth.
Okay, so it's like the calm after the storm.
Perhaps. It could be a period of consolidation and reassessment as the new administration sets its agenda and policies.
Got it. So we've got these two historical trends.
Yes.
We've got market momentum,
Right.
and we've got the presidential cycle, both potentially pointing towards a positive start for the stock market in January 2025. But The article doesn't stop there.
No, it doesn't.
They throw in another intriguing element, and that is institutional investors.
Yeah, and this is where it gets really interesting because these are the big players.
Right.
The ones with the resources to really make significant moves in the market.
Yeah, the whales of Wall Street. And according to the article, they have a bit of a pattern in January.
They do.
Right.
What is it? Well, they tend to concentrate their bets
Okay.
on what the article calls outlier stocks.
Interesting outlier stocks.
Companies that are expected to have exceptional earnings growth in the coming year.
So these are like the companies that are going to like buck the trend and really deliver those outsized returns.
Precisely. They are expected to really, break out from the pack.
Okay. And they give NVIDIA in 2024 as a prime example.
Yes.
Now, NVIDIA, weren't they all over the news last year for just their phenomenal growth?
Absolutely. And the article suggests that those institutional investors were piling into NVIDIA in early 2024,
Really?
seemingly anticipating that surge in performance, and their instincts proved to be right,
Wow.
as the stock saw, impressive gains throughout the year.
So is this a case of like following the smart money? If these institutional investors are betting big on certain companies, does that mean we should be paying attention?
That is a strategy that some investors employ.
Okay.
And the idea is that, these institutions have access to, vast amounts of research and analysis.
Yeah.
And their decisions can provide valuable insights into the market trends.
Yeah, but even the most sophisticated investors can get it wrong, right?
Absolutely.
Yeah.
No one has a crystal ball.
Right.
But it's fascinating to see how these institutional investors can influence market dynamics.
Right. And, the article mentions that the initial estimates for NVIDIA's net income in fiscal year 2025 were like $47.85 billion
Right.
back in January of 2024. But by the end of the year, those estimates had jumped to a whopping $70 billion.
That's a remarkable increase. And I think it speaks to the power of investor sentiment. When institutional investors start pouring money into a company, it can create a self-fulfilling prophecy.
Okay, so it's not just about like the company's fundamentals, but also the perception of its potential.
Exactly.
Okay.
The influx of capital can drive up the stock price and then ultimately lead to even higher earnings expectations. In a sense, it's earnings following stocks
Oh, interesting.
rather than the traditional stocks following earnings paradigm.
That is a fascinating point. It seems like with these outlier stocks, the enthusiasm can actually fuel the company's growth.
Right.
Now, speaking of these outlier stocks, they brought up another example, Broadcom,
Yes, Broadcom.
another semiconductor company that had an exceptional year in 2024.
Yes.
And they described the stock price chart as a stairway to heaven.
Yes, a steady upward climb fueled by institutional buying.
I love that visual stairway to heaven. Like the stock is destined to keep rising.
That's the impression that it conveys, for sure.
And what's fascinating about Broadcom's case is that it really underscores the importance of identifying those companies that are attracting significant institutional investment early on.
Exactly.
So it's like getting in on the ground floor before everyone else catches on.
Absolutely. And that seems to be the key takeaway here. Understanding where that big money is flowing
Right.
and specifically identifying these outlier stocks that are favored by these big institutions could be crucial to success in the market.
It's not just about picking the right sectors, but spotting those companies that have that special something
Absolutely.
that attracts the attention of these institutional investors.
Right.
It's like a treasure hunt.
It is.
Right.
In a way.
Yeah.
Yes. And like any good treasure hunt,
Yeah.
it requires, careful observation analysis.
Yes.
A little bit of intuition.
All right, so we've got our detective hats on. We're looking for these outlier stocks that could potentially deliver these outsized returns. But before we get too deep into our investigation, let's take a quick break. We'll be right back.
It's a fun challenge,
Yeah. Trying to anticipate which sectors might hold those next big outlier stocks.
Exactly.
But, just to be clear, we're not offering investment advice.
Of course.
This is just purely for entertainment purposes.
Absolutely.
We're just brainstorming here,
Right.
exploring some ideas.
If I were to put on my speculative hat
Hey.
for a moment,
All right.
I think there's a few areas worth keeping an eye on in 2025.
I'm all ears. What do you got? What sectors are you watching?
Well, first, I would keep a close eye on artificial intelligence,
Okay.
AI.
AI, yeah.
We saw NVIDIA's explosive growth in 2024,
Right,
and I think that's just a glimpse of what's to come.
right.
I mean, AI is rapidly transforming everything
Yeah, it's everywhere.
from healthcare and finance to even how we get around.
It really is.
So I'd be looking for companies that are developing those cutting-edge AI technologies,
Mm-hmm.
especially ones that could disrupt major industries.
Okay, so AI is officially on the watch list. What else?
Another area I find particularly intriguing is renewable energy.
Okay, yeah.
With the increasing focus on climate change,
Right.
there's a massive shift towards those cleaner energy sources.
Yeah, like solar.
Solar and wind.
Wind, can't forget electric vehicles too. They're becoming more and more popular.
Absolutely. So within renewable energy, I would be looking for companies that are involved in producing and distributing or storing clean energy. And let's not overlook those developing those innovative technologies that could accelerate the move away from fossil fuels.
Right, it feels like those industries are just going to grow in the years to come.
Yeah, I tend to agree.
Okay.
Now, this last one might sound a little out there,
Right?
but I'm also keeping an eye on the space industry.
To space.
Space.
I mean, like rockets and satellites and all that.
Exactly.
Okay.
It might sound futuristic,
Yeah.
but commercialization of space is happening now.
Really?
Companies like SpaceX and Blue Origin,
Yeah.
they're making space travel more accessible,
Okay.
and there are countless opportunities emerging in satellite communications,
Wow.
space tourism,
Space tourism.
and even resource extraction from asteroids.
Hold on. Resource extraction from asteroids?
It does.
That's like straight out of a sci-fi movie.
It does sound like science fiction, but it's becoming a reality.
Wow.
Now, of course, investing in the space industry has its own set of risks.
Right.
I mean, it's a relatively young sector.
Yeah.
And there are a lot of unknowns.
So high risk, high reward.
Precisely. That's why it's crucial to really do your due diligence.
Right.
Understand the companies you know before you invest,
Okay.
and be prepared for volatility.
Yeah, speaking of volatility,
Okay?
the article, really emphasizes the importance of market breadth.
Yeah, that weak breadth
Mhm.
signal
Yeah.
we talked about.
It kind of reminds us that even in a strong market, not all stocks are created equal.
Right. And even though a narrow market can be bullish historically,
Yeah.
it also means we need to be very selective of where we put our money.
Yeah, we can't just chase the hottest stocks or sectors without understanding like the fundamentals,
I couldn't agree more.
their growth potential, their competitive landscape,
Exactly.
the strength of their management team.
Yeah.
It all comes back to research.
It does.
Now let's go back to those institutional investors for a second. The article mentioned that they tend to favor those outlier stocks in January. Right. Like early in the year. So why January? What is it about the start of the year that makes these institutions like so active? Is it just because they have like fresh capital after the holidays, or is there something else to it?
That could be part of it. Perhaps they're, rebalancing their portfolios after
Yeah.
taking some profits,
Right.
looking for some new opportunities.
Hmm.
But there might be some other factors at play as well.
What else might be driving their decisions?
Well, consider this. January is when a lot of companies release those fourth quarter earnings reports and give their guidance
Right.
for the year ahead. So institutional investors might be looking for companies that are beating expectations or raising their outlook,
Mm-hmm.
signaling, strong potential for growth.
So they're looking for those clues about, who the winners might be in the new year.
Absolutely. They're trying to get a head start on
Yeah.
the rest of the market.
And, another thing to consider is that January often sets the tone for the rest of the year
Right.
in the stock market.
So a strong start in January could create a positive momentum.
Yeah, that carries through the following months.
That's often the case,
Yeah.
though of course there are always exceptions.
Right.
But historically speaking, January's been a pretty significant month for the stock market.
So January is a month to watch.
I would definitely say so.
Yeah.
It's a time when typically there's a lot of action, a lot of information coming out, and potentially a lot of opportunities.
We've been talking a lot about like specific sectors and companies, but I think it's also important to kind of take a step back and remember like the bigger picture here for a moment.
You mean the why behind all of this?
Yeah, why do we even care about the stock market and investing?
Right. I mean, at the end of the day, it's about building wealth, achieving our financial goals, securing our future.
Yeah.
For a lot of people, investing in the stock market is a way to grow their savings over the long term.
Right.
Hopefully beat inflation.
Uh-huh.
It can be a path to financial independence, early retirement, or simply having more choices in life.
Right. And it's not just about individual investors.
Of course not.
The stock market plays like a vital role in the economy as a whole.
Absolutely.
Yeah.
It's how companies raise capital,
Yeah.
which they can then use for things like research and development, expanding their operation.
Yeah, creating jobs,
Creating jobs.
driving economic growth.
Exactly.
So even if you're not like actively trading stocks yourself, the performance of the stock market can really like ripple out and impact your life in so many
It's
ways.
a really important point.
Yeah.
It's all interconnected.
Yeah.
That's why it's beneficial for everyone to have at least a basic understanding of how the stock market works,
Right.
even if you're not a seasoned investor.
Knowledge is power.
It is.
Now, before we wrap up this part of our deep dive, I want to bring us back to those outlier stocks for a sec
Okay.
that the institutional investors seem to favor in January.
Mhm.
We talked about some potential sectors.
Right.
Right.
Yes.
But are there any specific companies that are kind of catching your eye as we head into 2025?
It's a very tempting question.
I know, right? But I knew you were going to say that.
But I have to tread very carefully here.
What?
I don't want to cross the line into giving investment advice.
I understand.
Right.
Yeah.
But maybe I could share some hypothetical examples.
Hypothetical. Okay. Yeah.
So let's say, for instance,
Okay.
that we are particularly interested in the artificial intelligence space.
Okay.
Are there any companies that might fit the profile of a potential outlier stock in that sector?
Oh, yes.
Well, hypothetically speaking,
Okay.
if we were looking for companies that are pushing the boundaries of AI
Right.
and disrupting industries,
Okay.
we might consider companies like Google,
Okay.
or maybe a lesser-known player like C3.ai.
Okay, so those are some names to kind of keep on the radar. Google, we all know. C3.ai, that one's new to me. What do they do?
C3.ai focuses on developing enterprise AI software,
Oh.
and they're helping businesses across a variety of industries, from manufacturing to energy,
Oh, wow.
harness the power of AI to optimize their operations, improve efficiency, and make better decisions.
So they're kind of like the behind-the-scenes AI players.
Exactly.
Okay.
Empowering other businesses.
That's really interesting.
Yeah.
What about in the renewable energy sector?
Right.
Any hypothetical outlier candidates there?
Hypothetically, in the solar energy space, we might consider a company like First Solar.
Okay.
They're a leading manufacturer of thin film solar panels.
First Solar, got it. And just to reiterate, dear listener, we're not suggesting you run out and buy any of these stocks. This is purely hypothetical. Do your own research.
Absolutely.
No.
We're simply trying to get you thinking about how to identify companies
Yeah.
with the potential to be those next big market winners.
Right.
And what works for one investor might not work for another.
Yeah.
It's all about aligning, your investments with your individual financial goals and your risk tolerance.
Totally. Speaking of risk,
Oh, yeah.
we have to acknowledge the elephant in the room, the
Yeah.
possibility that all of these predictions could be completely wrong.
That's right.
You know?
That is the nature of the beast, isn't it?
Yeah.
I mean, we can analyze these historical trends.
Yeah.
We can study the data.
Yeah.
We can make educated guesses.
Right.
But we can never know for sure what the future holds.
Right. Yeah.
And that's why diversification is so important.
Oh, yeah. The classic, don't put all your eggs in one basket approach.
Exactly.
Right.
So even if we're bullish on certain sectors or certain companies,
Right.
it's wise to spread those investments
Yeah.
across different asset classes, different industries.
Diversify, diversify, diversify.
Absolutely. It helps mitigate the risk and potentially smooth out returns over time.
Right. And it's also really important to remember that investing is like a long game.
It is.
It's not a get-rich-quick scheme,
No.
right? It's about patience, discipline, and staying the course, even when the market is throwing those curveballs at you.
Absolutely.
Yeah.
It's about weathering the storm and coming out stronger.
Mm.
And it's about constantly learning and adapting as the market evolves.
Well, this has been an incredibly insightful deep dive.
It has.
I feel like we've covered so much. We've talked about market breadth,
Yeah.
historical trends, institutional investors,
Absolutely.
and we've even ventured into the world of these hypothetical outlier stocks.
We have.
But before we let you go, I want to circle back to one of the article's key points. The idea that institutional footprints reveal tomorrow's leading stocks today.
Right.
So powerful.
That's a powerful concept for sure.
Yeah.
And it suggests that by watching, where that big money is flowing,
Right.
we might be able to get a glimpse of which companies are positioned for that significant growth.
Yeah. And while we looked at some hypothetical examples,
Right.
the real challenge is doing your research
Absolutely.
and identifying those companies that have the potential to be the next NVIDIAs
Exactly.
or Broadcoms of the world.
Right.
That's where the real excitement lies.
It is. It's like being a detective,
Yeah.
piecing together those clues
Yeah.
and trying to solve the mystery
Yeah.
of, which companies will be the market leaders.
Totally. Well, on that note, we will leave you to your sleuthing, dear listener. Keep exploring, keep learning, and most importantly, keep investing in your future.
Absolutely.
Thanks for joining us on this deep dive.
Thanks for having me.
Okay, so we added Google and C3.ai to our hypothetical AI watch list,
Right.
right?
Yes.
So,
Hmm.
what about renewable energy? Any other companies come to mind that might fit that outlier profile?
Well, if we're sticking with solar,
Okay.
there's a company called Enphase Energy.
Enphase.
That's doing some really interesting things.
Okay.
They're not just making solar panels.
Right.
They're developing these microinverter-based solar and battery systems.
Oh, wow.
And these systems are more efficient
Okay.
and reliable than traditional solar setups.
Mm-hmm.
And they even offer homeowners backup power
Oh, that's cool.
during outages.
So they're tapping into that growing desire for energy independence and resilience.
Exactly.
Yeah, it's smart.
It seems like they're not just riding the renewable energy wave.
Yeah.
They're actually innovating within it.
Okay.
Yeah.
So we've got Enphase Energy on our radar now, too. But I want to shift gears for a moment
Okay.
and venture into that final frontier that you mentioned, space.
Yes.
I'm still reeling from the idea of asteroid mining. It just sounds so futuristic.
A little bit.
But are there companies that are actually making this a reality right now?
Well, there's one company in particular that I find fascinating. It's called Planetary Resources.
Okay.
And they are developing technology to prospect
Okay.
and eventually mine near-Earth asteroids
Oh, wow.
for resources like
Lensler.
water.
Water in space.
I know it might sound strange,
Yeah.
but water is actually a valuable resource in space
Okay.
because it can be broken down into hydrogen and oxygen,
Right.
which can be used as rocket fuel. So this could potentially make space travel much more cost-effective and sustainable.
So Planetary Resources is tapping into this growing demand for resources in space.
Exactly.
Okay.
And they're not alone. There are other companies that are, exploring similar ventures, focused on everything from satellite servicing and space debris removal to building infrastructure for lunar and Martian outposts.
This is blowing my mind.
Yeah, it's pretty incredible.
The space industry is really starting to take off.
It is, and while it is a high-risk sector,
Yeah,
the potential rewards are astronomical.
I see what you did there.
Pun intended.
But really, this has been so eye-opening.
Yeah.
All these companies pushing the boundaries of innovation,
Right.
shaping the future.
It's really inspiring, I think.
It is. So as we kind of wrap up this deep dive into these potential stock market trends for January 2025,
Yeah.
what's the one key takeaway that you want our listeners to walk away with?
Well, I think the most important thing is to approach investing with a sense of curiosity and a willingness to learn. Don't be afraid to explore new sectors, research emerging trends,
Yeah.
and challenge your assumptions.
And of course, do your due diligence.
Of course.
Always. Before making any investment decisions, don't just take our word for it.
Absolutely.
Right.
The more informed you are, the better equipped you'll be to navigate the complexities of the market and hopefully make those sound investment choices.
This has been such a journey.
It has been.
We delved into the market trends, explored these new, exciting sectors, and we even contemplated the future of space exploration. I don't know about you, but I'm feeling energized
I agree.
and ready to start my own outlier stock hunt.
Yeah, me too. It's a reminder that, the world is full of possibilities,
Yeah.
and there are always new opportunities out there waiting to be discovered.
Well, thank you for joining us on this deep dive, dear listener.
Yes, thank you.
We hope you enjoyed the ride.
We'll see you next time.